Traders, welcome back to another Relentless recap. As you guys are tuning in, hit that thumbs up. And of course, if you're a new viewer, consider subscribing to the channel. All right, in the title, you guys saw, me saying holding into a halt for a loss, all right? Today, we're going to talk a little bit about, halted stocks and how they can be very strong and at times very weak. And we have none other than stock ZURA. Let me see if I can get a bit of an update here. ZURA, this was a stock that was halted up a couple of times today. And you guys can see it initially got halted up on very, very light volume around 10 a.m. 10:06 a.m. It's halted. And for a really long time, right? All the way up until 10:45, then resumes. It's halted up at 7.67. This thing resumes at 10.62. Almost $3 a share. Absolutely crazy. There's about 32,000 shares of volume. It rips up into another halt at 12.16. And then from 10:46, we resume at 10 minutes later at 10:56 a.m. And we go all the way to a high of 13.53. So from 12.16, it goes up another dollar a share. And then on the third resumption, it halts going down, resumes lower, curls up, slams back down, halted down, and resumes lower again. So, guys, halted stocks are very volatile. For me personally, I like to say that there are three areas / time of day where stocks are very volatile. That is the first minute of the open, the last few minutes of the close, and of course, halt resumptions. Guys, halt resumptions are high risk, high reward trades. The stocks are flying up and down, and you got to really be careful. Now, ZURA in particular, I did not trade, but I want to talk about SBFM, right? SBFM. This one, beautiful move pre-market, curling up nicely, right? If we look at our 5-minute or 1-minute charts here, let's enlarge the 1 minute. Looking beautiful, looking lovely. Nice move. We're seeing 3-bar plays, right? 3-bar play here, quick pullbacks, nice continuation, baby pullbacks, right? The candle, first 1-minute candle continues to make the new high, and we start to consolidate sideways. Small pullback, quick red to green, the 1-minute candle makes the new high. This thing rips into a halt. Beautiful move. It dips, rips on the resumption, continues higher, halted at 140, looking great. And look at this travesty of a resumption. Catastrophic. And usually I have the rule of three. Hey, the third pullback, the third halt, the third day of continuation. Be careful, as there is another degree of magnitude of risk. And so this one, unfortunately, even with lighter volume coming down, was not able to recover. And imagine buying, if you chased the stock, you bought super high 39.40 into this halt, and it resumes at 135 and completely flushes down 120. Let's take a look at this on the recording from today. All right, we'll talk about how I was able to make money on this stock, but we definitely want to take a look at this resumption. All right. So here we are, a couple seconds to go, and I'm expecting this thing to open up and go higher. And look at that, immediately flushes down to 20, almost instantly. And it's hard to sell shares right here as everyone else is trying to sell. You see those orders on the ass piling up to get out. Absolutely disastrous. Absolutely disastrous. Not what we want to see at all. Again, it's going to resume here, a couple seconds, and immediately flush. One more look. You barely get a chance to sell there, man. And if you're holding up at 40, it's a 20-cent loss almost instantly. So, the risk, all of this is to say, guys, day trading is risky, all right? Day trading is risky, and I do think holding into halts can work well, but it has to be under a specific circumstance, right? Now, right here, if anyone was holding into this halt and took this loss, you got to just sum it up as part of the deal. This did look good to go higher, but it opened up lower, right? I think the best time to hold into a halt is when we are going from a slow market into a hot market, and we're into that, first, let's say, week and a half into that hot market, right? Once you've been seeing stocks consistently halting higher, opening higher, halting and opening higher for days on end, by that fourth day, right? When okay, man, we're now out of a cold market. This is the start of a hot market. I think it can be done, but even then, you got to still accept and understand the risk, right? But when we're on the backside of a hot market, or if that hot market is seeming to be slowing down, you got to be careful, because we can't see weakness like this where you get caught off guard, right? In terms of how I made money on this stock, well, the good old trick of the break of the whole dollar, right? The setup that we know and love. We break down here, and as the stock crawls back over one, right? I believe we had no lows of like 92, 93. Break of one, can we hold above one? And once it does hold above $1 here, I am involved. So I start buying here, and initially I'm in a small size, right? 1500. I'm out half. I add back as we continue to hold. I sell half at like 5, sell the other half at 9. That puts me into the green slightly. And then I size up some more for break of 110. And I'm in 3,000 shares as we are eating away at some sellers sitting there. I'm in. It immediately rips up to 16, so there's another 6 cents gain, 3,000 shares. Unfortunately, I botched this resumption. I bought the very low of this candlestick. I did, in at 119 versus the low at 118, but I just did not like the price action I was seeing, and I was uncertain. To if we had got bottomed out or not, and so for those reasons, I was in and out like about 4 times. And I'm like, you know what, I'll wait. But by that time, it was already too late. We'd already made the low, and we were curling, and it was aggressive once the volume came about 27, 28. Boom, rips up right here, and it's halted up. And so if I did a good job with my 3,000 shares down here, I could have essentially been selling, 500 share blocks, let's say 28. 30, 35, and so forth, 37, all the way up to 40 for a really nice gain. But we botched those trades, but nevertheless, green is good. $400 on the day will help to keep the 9 to 5 away, right? And we were done within about 40 minutes, maybe. So this was a great day. We didn't stick around. I'm not sure if anything else did move. I didn't even watch the Discord because I did not want to get sucked back in. Said Relentless, that's it. Stay away. Green is good, and get out of here. All right. So, guys, remember, day trading is risky, right? Let's talk a little bit about the risk of day trading, right? Day trading is risky. If you are new to the markets, right? If this is your first time coming across this channel, the people who are here every day, the OGs, they know what I'm talking about. But for the new people, remember, guys, day trading is like any other field. It's like a business, and it takes time. You have to gain experience, you have to gain confidence, and only then, when you start to see consistency, you should be using real money, and especially using real money sizing up. All right, other than that, you have to take it slow, trade in a simulator, or use risk money that if you lose it all today, right here, right now, does not affect your livelihood or your lifestyle. You can still pay your bills. So if you're new to the market, do not use family savings, life savings, retirement money, things like that to get started. Now, if you're a seasoned professional, let's say for me, relentless trader, right? If my power goes out tomorrow and I'm in a trade, my biggest position ever, and boom, my account goes to zero, right? Let's just say some freak accident happens, my power is out, I'm in a trade, I can't get out. If I have retirement money and or savings or something like that, I wouldn't mind using it to make, to fund my account again and then go back to what I was doing. But for people who are not seasoned, you have to be a seasoned professional and expert in a sense, right? To take money and not have that pressure and just have the confidence really to know I've been doing this and I'll just do it again, right? But if you're new, you lack the experience and all that stuff, highly, highly, highly recommend you do not do it And even when you've gained experience, if you do go live and you're using some sort of, something that's, let's say, high risk, uh, if you're not seeing the consistency, stop, right? Stop, take that step back, adjust, and then go again, right? Don't bleed out, don't give everything away. We got to be smart about our money. We got to protect our money, protect our mind, right? We got to protect our mind because we can easily be depressed. We can easily be, in that funk, and it shows, right? It shows. Your coworkers will notice, your spouse will notice, your siblings, your kids, all these things. So, let's keep our mental intact, and let's not allow the market to get the better of us. All right. So let's stay disciplined. Let's make sure we make the right decisions when it comes to, our futures, and let's do whatever is necessary to ensure success. It's been Relentless Trader, and I am, of course, signing out. Hit that thumbs up bright and early, 9:15 a.m. tomorrow morning.